Good morning, good morning, good morning. It is Monday the 27th of January. It's just coming up to 8:30. It's the morning blast with myself and Michael Brown, where we will jumpstart your trading day with an explosive daily preview. I think we call it explosive just because we tend to swear a lot, really. Speak of the devil, there's Mr. Michael Brown. Let's invite him to be a co-host, I suppose. Dum, dum, dum. Right, that invite is being sent, my dear friend. Let's wait for you to turn up, then we can do the legals.
Very good morning, Ryan.
Hello.
Good
Good
morning, everyone.
my dear friend. Good morning. How are you?
I'm very well, mate. I'm very well. There's just one question on my mind, which is why did the Elliott Wave people not tell us that China were making all these advances in AI?
Right, I think you've done yourself a kipper there because I give it 10-15 minutes and they'll be out with the charts to say, oh look, it was the third wave of the C wave on the B triangle. I told you this was going to happen. Always the way. If you're friends with an Elliott Wave person, you're a lucky person because they know everything that's going to happen ever in whatever subject, not even markets. They can see the future.
But anyway, they can only see the future after it's happened.
Oh yeah, obviously, yeah, very much so. Oh, there's nothing quite like getting the week started by a bit of Elliott Wave bashing. Sorry if you're a Elliott Wave disciple and you're listening in, but myself and Mr. Brown think you're talking bollocks. There we go. Let's get the legals out of the way before I'm sued my tits off. Nothing discussed on this basis session constitute trading or investment advice or infers any kind of endorsement by POQ Global Limited, Traders POQ or POQ Suite, or indeed the affiliates, including the hosts, which as you know by now is Mr. Michael Brown, way, Mr. Ryan Paisley, way. Have you had a good weekend?
Yes, not too bad at all, actually. Arsenal got a good result, obviously, and Spurs lost, which is even more worthy of celebration.
We won't talk about the red card in the Arsenal game. Michael Oliver, Jesus, yeah.
I've got to say, if you're a Spurs supporting Elliott Wave nut, then this show probably isn't for you, I'm afraid.
Also, if you also happen to be Rachel Reeves listening in anonymously, that also she turns out she supports Spurs and loves a bit of Elliott Wave. Yeah, see you later.
Oh, dearie me. Right, anyway, let's get on with something vaguely market-related. Good morning, everybody. Of course, it has been a pretty chunky risk-off move to start the new trading week. As I speak, the front S&P future is trading down by just shy of 2%. The front Nasdaq future trading down by about 3%. The European market also trading a fair chunk lower. Some of the semiconductor stocks hit quite heavily. ASML, when it eventually did opened up down by about 9%. And of course, US pre-market trade will get underway in about half an hour's time. So it'll be interesting to see how the likes of Nvidia trade upon the reopen. The reason...
Well, sorry, but they are, technically available on Pepperstone already, right?
They are, yes, but I'm not allowed to promote that. So.
Oh, I can. Well, sorry, I'm allowed to. Sorry about that. Yeah, sorry. Yeah, definitely check out Pepperstone, one of the few brokers that offer 24-hour trading. Obviously not at weekends, but yeah, if you want to get early action on those tech names, there you go. Seamless.
Indeed. There we go.
Bloody hell. We got to work on that a little bit.
Oh, we really do. The reason for this lurch lower is because of something called DeepSeek. Now, of course, we all know that AI is my strong suit, my forte, so we'll give this our best shot. Effectively, what DeepSeek appears to be is a Chinese-led startup company which has developed an AI model that is apparently roughly as good as the ones that have been created by the likes of OpenAI, which are obviously behind ChatGPT, but they have created and trained this model at a fraction of the cost and using a fraction of the number of chips, and also older chips than the likes of OpenAI and Meta, etc. are currently using.
It also relies a lot on like open source as well, so like there's more people getting involved with it and stuff like that. And and to be fair, obviously I'm nearly as clueless as you on this stuff, but thankfully my techie friends have told me that it's actually the fact that it's more the open source is the story here more than potentially DeepSeek. The fact that if you get enough people together, that whole open source technology and all of that stuff really does open up some magnificently wide doors to get some really good technology through. So perhaps the reason why markets are coming off so much, maybe not because of just DeepSeek itself, but the fact that people are realizing that, hang on a second, 95% of OpenAI's costs are basically overheads, and they don't exist when you're doing open source work and projects. So something, definitely to keep an eye on. Potentially a bit of a game changer, but how often have
potentially.
we heard that?
Well, exactly. I think only
Also,
time
can
will
I
tell
just,
on that front.
because I was going to bring this up later, but as we're talking about it, I might as well say it now. Right, bearing in mind no one trusts TikTok, why is everyone all of a sudden so happy to be typing in stuff that that at the end of the day
Yep.
was kind of you feel me?
Yep. Well, I literally wrote this in an email probably about an hour ago. We've literally just had Western governments banning an app where people do dances for fear of Chinese espionage. Does anyone seriously think that they're going to let Chinese AI fly? And also, how many morons are out there who, have probably been on the side of, yes, we should ban TikTok, we should get rid of it, the Chinese are spying on us. But here's this new fancy AI thing. Let me type my
Absolutely.
life story into it.
Yeah,
I mean,
absolutely.
it's ridiculous.
And also,
But anyway,
TikTok doesn't risk crashing the market, whereas this does, so even more reason to shut it down.
Yeah, that's very true. And of course, just to take that a bit of a step further, like the in terms of the reason, the context behind some of the market downside, obviously the assumption here is, and again, I think we need to take this with a huge pinch of salt. This is still very, very early days, but the assumption being that if I've dropped that on the floor now.
Oh no!
Hang on.
Oh no!
Christ me! I've dropped my headphone. Hang on. Am I still there?
Yeah.
Right. Good. Where was I? Yes, the assumption being, of course, that if there is effectively a cheaper way and a more efficient way to quote unquote do AI, then this could lead to some of the significant capital expenditure that we've seen on chips and on various sort of semiconductor products be reined in a little bit, because effectively there might not be as much of a need for it. By extension, you would perhaps see some of the incredible sales and revenue growth that companies like Nvidia have been recording. That would obviously not be maintained, and obviously the market needs to discount that from what are very, very lofty but probably at the moment still justified valuations. And that is why we see the market trading a fair chunk lower this morning.
Again,
sorry, just one last thing I would say on that is it is obviously also pretty bad timing for this sort of news to arrive, given that over the course of the week ahead, we've obviously got a Fed decision, but we've also got earnings from 4 of the Magnificent 7 in the mix as well. So it's not really as if participants actually needed an excuse to take a bit of risk off the table. And this headline, or these headlines, I should say, have probably just been another catalyst to trim positions into what was already going to be a very busy week, which we'll cover later on.
Just one final thing to add on this, and we will carry on with the show, but obviously this is quite an important situation. It has moved markets considerably overnight, like Nasdaq's down like 3%. I'm showing on my CME board. Just a couple of things to bear in mind with this is this benefit. Yes, it's really crap for people like Nvidia if this all comes to fruition, which we don't know if it will do yet. So again, as Michael Brown rightly said, pinch of salt. But one group that it does benefit are the consumers of AI and consumers of Nvidia chips and stuff like that. Like, for instance, we've been seeing reports. There was a really good Goldman Sachs note out a week ago or so, a couple of weeks ago. It was saying that some companies they're already planning to spend like 10 billion over like even just a couple of years, or like hundreds of billions over multiple years to keep up with the AI race. Now, pardon me, if this all becomes a lot cheaper a lot sooner, they won't have to spend that money, which is obviously going to mean that they've got larger cash piles, and they're not so indebted to companies like Nvidia. So there are going to be winners out of this. It's just unfortunately not the likes of Nvidia that are kind of powering the market at the moment.
Yes, indeed. Right, I think that's probably enough on AI for now, and probably for the next month or so.
At the deep end of the pool on this.
I was going to say we've certainly exhausted all of my knowledge on the matter. In any case, back to the back end of last week and over the weekend, a few interesting themes that are worth noting. Of course, on Friday we did have the latest flash PMI figures, a decent set of data in the Eurozone with the composite output gauge rising back into expansionary territory at 50.2. That was in turn a 5-month high. Probably still too early to kind of sound the all clear on the Eurozone economy, given the number of downside risks that remain. But nonetheless, it is notable to start seeing data surprising to the upside. And we did see the euro briefly trading north of 105 to 1-month highs into the close on Friday. We also had better than expected PMI figures out of the UK on Friday, with the manufacturing, services and composite output gauges all rising to 3-month highs in January. But if you dig into the details of the report, it wasn't quite as pretty as those headline metrics would imply, with price pressures remaining pretty stubborn, and also S&P Global stating that the rate of job shedding within the UK economy was the fastest since 2009 when you exclude the period over the pandemic. So clearly, despite what the headline metrics may imply, all is not fine and dandy within the UK economy, and risks do remain. In the US, we had the latest existing home sales data on Friday, slightly better than expected, 4.24 million compared to the prior 4.15. We also had a modest downward revision to the final reading on consumer sentiment from the University of Michigan. That index ending January at 71.1, down from the preliminary read of 73.2. In terms of headlines over the weekend, we have seen some tariff news. President Trump, just to give some context on this, of course, one of the things that Trump has been seeking to do in his early days in the Oval Office is to use the US military, and particularly their aircraft, in order to deport migrants who are in the US illegally. There were 2 flights that were due to land in Colombia on Sunday. The Colombian government said, nope, we're not giving you permission to land here. So Trump went, okay, fine, here's a 25% tariff on all your imports, and if you don't change your mind by next weekend, I'll double it to 50%. What do you know? 9 hours later, Colombia have not only given them permission to land those planes, but they've also said, why don't you use our presidential aircraft to fly some migrants here as well? I think if you set aside the optics of that situation, which are quite frankly hilarious, it does serve as a useful reminder to market participants that tariffs are effectively viewed as a negotiating tool by Trump. They are a very, very big stick with which to beat people with. And again, as we've said before, it is a case of he will put tariffs in to get you to come to the table. If you don't come to the table, those tariffs will go up until you do come to the table and until you do what the US want you to do. And I think markets may have got, yeah, indeed, Agadoo and all the rest of it. I think markets may have got perhaps a little bit complacent last week. Obviously, it's kind of hard to judge given the risk aversion we see this morning. Yeah. But I do think that the fact that we didn't get any tariffs on day one, a fair few participants went, oh, that means we're not going to get any tariffs ever. And that is clearly not the case. And of course, do bear in mind that we still have that possibility of Mexican and Canadian tariffs going into place on the 1st of February.
Just on this, I think the tariffs are being used by Trump in a completely different way to what we've seen on previously by pretty much any other government, although he was close to this on his last term, which they're being used as a, almost like a shock tactic. He's not saying, okay, well, let's go to committee and we'll talk about tariffs and they might hit you in a month's time. He's using them on the fly and going, hang on a second, I don't like what you're doing. You better stop that. Bang, tariffs right now. Absolutely. And I think this is, I've never been a believer in tariffs tariffs and sanctions working that well. There's always ways to get around them. But that's usually the case when there's a big build up to them being applied. I do think that really changes the game when you're using them in this fashion, because you are literally scaring the bejesus out of the people. Like, the Colombian president to turn around and say, actually, take my plane. Honestly, here's the keys. Do whatever you want. It just shows you the power of them. And it's going to also make other countries now think, hang on a second. This isn't the Biden administration. This isn't even the previous Trump administration. He will react very quickly to anything that he doesn't like. And it will cut a lot of things dead that that people are thinking about doing, or certainly going to be putting the wind up the EU. And as we know, as we spoke about many times before, the EU Germany and France, 2 powerhouses of Europe, don't have functioning governments. So the EU and potentially as well the ECB will be looking at this, going, "Shit, yeah, we just got to smile and wave until we can get our own houses in order."
Yes, indeed. Those export-dependent economies are
Yeah.
potentially in real trouble, and certainly they're going to be on their best behaviour. Three more things from me before we move on. The first, in terms of Tesla, they've had to recall about 1.2 million vehicles in China. There are some safety concerns going on there. Secondly, ECB President Lagarde, we heard from her on Friday, again reiterating that she has strong confidence that inflation will continue to slow. Of course, the ECB decide policy later this week, and mercifully they're now in their pre-meeting blackout period, so we won't hear from that lot for a short while. And last but by no means least, one for the London-listed Diageo, reports via Bloomberg on Friday that they are apparently looking to review their portfolio of brands in order to reignite growth within the business. And apparently one of those options is to potentially sell or spin off the Guinness brand, which is estimated to be worth about $10 billion. If that were to happen,
shocked it's that little. I thought Guinness. Well, that's maybe because I love Guinness, but I was expecting hundreds and billions. I think it's cheap. Can we have a whip round?
Well, I agree. I would agree that it does feel cheap. If they were to spin off Guinness, it would, one, be a bit odd because they've just invested a whole shed load of cash in the manufacturing and brewing chain behind Guinness, and secondly, it would also mean that Diageo comes out of the beer market and pivots much more towards premium and luxury spirits, which probably wouldn't be up your street, right?
No, exactly that. Just spirits and ghosts, I'm assuming you mean. Just a quick one on this. Tom is listening. So he told me a very good fact. Please tell me if this is absolute bollocks. But apparently, the reason why Guinness Zero tastes exactly like full fat Guinness, as I like to call it, is because they're not brewing them different ways, which a lot of these companies, if they do a non-alcoholic version or a very, very low alcoholic version, they brew it slightly in a whole different manner. Therefore, sometimes it tastes slightly different. But apparently with Guinness Zero, and it does taste exactly the same as Guinness. I've done a lot of sampling in this area. I haven't trusted it, so I keep going back for more. And compared to the full fat, it's because it's brewed exactly the same way, but then just passed through a fancy filter to remove the alcohol. There you go.
I wouldn't know, to be honest. I think non-alcoholic drinks are a bit stupid. If you don't want to drink a beer, that's no qualms with me, but just go and have a glass of fizzy pop instead.
Well, no, yeah, but I don't know. I do sometimes quite like to start slowly because we know how my nights end. So I know. I think I'm allowed to pass on that one. First two are zero.
Oh, he's disappeared. Ryan, are you still there?
Oh, it looks like we've lost Michael Brown. Oh, is he there?
No, I'm here.
Cool. Is it my turn? Shall I go through some headlines?
It is your turn, yes.
Perfect.
Why don't you crack on?
Cool, awesome. Mr. Michael Brown, thank you for that. So obviously, as usual, some overnight news. Well, not just overnight, some over the weekend news headlines from our dear friend Zach that will be going out in the overnight news roundup very shortly. Also, big shout out to Angie, who I do the grain market blast with. That'll be later on. That's up in the Jumbotron. Yes, where are we? So momentum is growing among President Trump's advisors to place 25% tariffs on Mexico and Canada as soon as Saturday, where Trump is amenable to the tariffs before negotiation strategy. The White House said Colombia agreed to the president's terms to including unrestricted acceptance of all illegal aliens from Colombia returned from the United States, avoiding the tariffs, as we've just mentioned. Trump said on Saturday he was in talks with multiple people over buying TikTok and would likely have a decision on the popular app's future in the next 30 days. Sticking with Trump said that his first international trip could be to Saudi Arabia, even though traditionally the US presidents visit Britain. Said, as we've heard a few headlines over the past 4 or 5 days even, said he's discussing bringing oil prices down with the Crown Prince. Wall Street Journal, an article in there saying the extra reward for owning stocks over bonds has disappeared. Notes the fall in S&P 500 equity risk premium is now beneath the US 10-year Treasury yield. That is something that our good friends Alpha Picks brought up on the Friday Fix and also in a couple of their notes recently. China's official gauge of factory activity tumbled in contractionary territory in January as factories suspended operations. days ahead of the Lunar New Year. Sticking in China, profits at China's industrial firms fell for a third straight year in 2024, underlying the urgency for policymakers to step up support for an economy facing tariff threats from the new Trump administration. Sticking with China, Chinese industrial profits showed commodity producers ending 2024 at the bottom of the pile, where crude processors, steel makers, and coal miners were the country's least profitable enterprises. Moving over to Britain, a clear majority of British businesses look set to cut the size of pay awards for staff in response to the coming tax hikes, and they remain pessimistic about the outlook for the economy. That's gone to two surveys which have been published on Reuters. UK banks have urged the BOE to dilute its plans for handling failing lenders, arguing that they go beyond the equivalent rules in the US or the EU and will impose significant costs on the sector. Moving a couple of headlines in geopolitical news. Big shipping companies say they won't send vessels back to the Red Sea despite a pledge by Iran-backed Houthi militants in Yemen not to attack them as long as a ceasefire in Gaza holds. I don't blame them, to be honest. If you can't, there's a few people I don't trust, and the Houthis are right up there. Well, any terrorist, to be honest. And finally, in geopolitical news, a subsea data cable, another one, between Latvia and Sweden was damaged on early Sunday, sparking a criminal investigation. Third such incident in the Baltic Sea in the past 3 months. And finally, just some equity news. Obviously, the top one regards DeepSeek and ChatGPT, where DeepSeek overtakes ChatGPT on Apple's app download rankings in the US to be number one. Analysts expect Tesla's vehicle sales to grow much more slowly this year, 16%, than the co-founder Musk's forecast, which is 20 to 30%. This is as Donald Trump seeks to dismantle the Biden-era climate policies that favor EVs. Investors offloaded a record amount of private equity stakes on the second-hand markets last year, as the prolonged drought in deal-making has encouraged pension funds and buyout groups to seek other ways to cash in their investments. And we've got something that me and you have mentioned, myself and you have mentioned a week or maybe a couple of weeks ago even. Volkswagen is open to Chinese rivals taking over excess production lines in Europe. This is something that we've noted before. Sorry, this is just me talking now. This is something we noted before about the Chinese coming in, because obviously Volkswagen are going to be shutting some lines and shutting some plants. It's going to be very much a bitter pill for the German policymakers to swallow, because obviously, the automotive sector was the German darling, but now the Chinese are coming over because Volkswagen just aren't profitable. The good news, though, and one of the reasons why they might have to swallow the pill, is because it means the plants stay open and the staff stay hired. So that'd be an interesting one to see how that plays out politically. BHP will not be making a fresh bid for rival miner Anglo American in the near term because its share prices have become too expensive. And finally, that's a decent reason, to be fair. And finally, distressed property sales in Hong Kong are beginning to bite banks. It needs to be well protected against loan losses. Again, this is just another potential issue with not just regular residential property, but also we know CRE is that big elephant in the room that we're waiting for that one to explode. And that's my lot. But before I do, big shout out, I completely forgot, big shout out to my dear friend Cam, who will be putting out the Crypto Blast very shortly. I forgot to mention him when I was giving my shout outs earlier. But anyway, back to you in the studio.
Good stuff. Thank you, Ryan. Well, of course, it has been an interesting start to the week, and it is a very, very busy week up ahead. In terms of scheduled events, then, today we have the latest IFO sentiment surveys from Germany, due in approximately 7 minutes' time, while the day ahead also brings supply from the United States in the form of a 2- and 5-year auction, while, of course, focus will also be on the broad-based risk-off move that we've seen on the back of those AI headlines. In terms of the rest of the week, tomorrow brings the latest durable goods orders and consumer confidence figures out of the States, as well as a 7-year auction and a busy day of earnings as well, including highlights such as Boeing and SAP, who report after the market close and are one of, if not the largest weighted stock in the DAX. On Wednesday, things start to heat up, really. I think from Wednesday morning until Thursday evening is likely to be really the meat of the week. Wednesday, brings a policy decision from the Riksbank, who are expected to deliver a 25 basis point rate cut, the Bank of Canada, who will also deliver a 25 basis point cut of their own, and of course the FOMC, who should keep the target range for the Fed funds rate steady at 4.25% to 4.5%, maintaining data-dependent guidance that allows them the flexibility to deliver further cuts in the first half of the year if the economy requires them. Money markets pricing the first 25 basis point cut by July. Wednesday is also a very busy day of corporate earnings as well. Before the open, rather topically, we hear from chip maker, well, not chip maker, but chip maker equipment maker, ASML. And then after the market close on Wednesday, we hear from Tesla, Meta, and Microsoft. And of course, that will also all be viewed in the context of the DeepSeek news that we have had this morning. Then into Thursday, we have the latest GDP figures from the Eurozone and from the United States. Of course, these figures will be the first estimate of Q4 GDP. Also on Thursday, we have a policy decision due from the ECB, where we're expecting a 25 basis point cut to 2.75%. The market fully pricing cuts from the ECB both this week and in March. And then on the earnings front on Thursday, we hear from Apple after the market close, as well as Intel and Visa. And then wrapping up what is a very busy week on Friday, we have the latest flash inflation figures due from Germany, the core PCE figures due from the United States, which is, of course, the Fed's preferred inflation metric. And we also have earnings from some of the big US energy companies, including ExxonMobil and Chevron. And Friday also marks the end of the Fed's blackout period, so Fed speak will likely pick up again into the weekend. And of course, amongst all of that, we will also continue to watch political developments very, very closely ahead of, as I alluded to earlier on, the potential imposition of tariffs on Mexican and Canadian goods from the 1st of Feb. And that is pretty much a lot from me this morning.
Brilliant. Well, slightly longer show than usual today. Obviously, I guess everyone can understand why. There was a lot to talk about, especially what the overnight.
Yeah, the market's not down 3% every morning, thankfully.
Well, this is it. Exactly that. Exactly that. Also, nat gas down 5.5% this morning. Eesh. That gives me some cold chills. Right, Mr. Michael Brown, thank you very much for today. Listeners, as always, thank you very much for tuning in. We do appreciate it, especially the regular listeners. We see you, we know you, we love you. If you are trading today, keep it tight. Have a lovely week, and hopefully we'll see you tomorrow. See you later.
Indeed. Bye for now.
Bye-bye. Bye.